For any trader, a trend day is a gift that keeps on giving. These days don't happen very often, so whenever they do, it's important to take full advantage of trend days. In today's video, I'd like to dive closer into trend days, and we'll take a look at how we can identify them early on in the morning. There's 3 different angles that I'll be looking at trend days from. The first is poking behind the scenes and taking a look at what the market internals told us. We'll take a look at the tick, the cumulative tick, along with things like the advanced decline spread. Once we do that, we'll move on to number 2, in which we take a look at the market structure. We'll look at the market structure using the market pulse line, that's this line that you see on our charts, along with a little bit more basic, more relatable approach, which is using moving averages. Finally, we'll combine all of that information to then study where the exact entries took place today, or at least where the different opportunities for entries were today. Now, today was a pretty picture-perfect trend day. In the morning, we had bear flags all throughout, which gave us entries for our short side opportunities, and in the afternoon, we had bull flags when we had the trend reverse. So we'll dive deeper into today's trading activity, trying to take a look at what happened underneath the hood to get a better understanding of trend days so we're more equipped and better prepared for the future. All right, let's dive in with taking a look at market internals first. Now let's start by taking a look at the tick, and this is the NYSE tick, and to get there inside of Thinkorswim, that's $TICK. Now the thing that stood out to me with the tick was, in the morning, for the first 30 minutes, the tick struggled to break above 0. 0 is this gray line right here, which told us that regardless of the selling pressure decreasing as time went on, the overall premise for the day still very much was selling pressure. Now the cumulative tick made this a lot easier to see. We can see this line trending to the negative side, and we even had, for all Volatility Box members, the Cumulative Tick Pro indicator give us an early heads up sign that, hey, today is likely to be a trending down day. This sign came on at 7 a.m. Pacific, and if we take a look at what SPY looked like at that point is where we had this first leg down lower, which gave us our first little clue that, hey, there's likely to be a lot of selling pressure for the morning. We're starting to slip in terms of price action. So right off the bat, in terms of takeaways, tick struggled to break above 0 in the first 30 minutes, the cumulative tick trending downwards, and our cumulative tick pro indicator is also giving us an early heads up sign that, hey, today's likely to be a trending down day. Now, the last thing we can take a look at with regards to market internals is the advanced decline spread. Taking a look at the advanced decline spread here, we can see with today's open, we opened quite a bit lower than even yesterday's low point for the advanced decline spread, and that gave us the sign that, hey, there was really no climbing out of this. The advanced decline spread was negative and it was widening. So across the board here, we have market internals all pointing to the bearish side. Now, of course, the advanced decline spread is easy to spot after the fact. There have been plenty of times where the advanced decline spread has actually recovered, but when you combine the advanced decline spread with the ticks unable to break above 0, with our cumulative tick indicator also giving us that likely trending down signal, all of those together give us the sign that, hey, our internals are weak. So that's the first part, market internals today, early on in the morning by 7 a.m. Pacific, so this is 30 minutes after the market opens, told us that, hey, today was a weak day with regards to the S&P 500 and the broader index markets. Now we move on next to market structure. For market structure, we can take a look at this using 2 different perspectives. The first is using our market pulse indicator, and that's this line right here on our charts. That's a variable moving average. The default is a 10-period VMA. The market pulse is an indicator we built together. It really identifies 4 different market stages for us, and when we see this red right here, that tells us that we're in the stage of deceleration, meaning we should expect bearish activity. Now, for much of the day today, minus a few spots, and this is on the 1-minute time frame, we had a pretty bearish market pulse here. It was mostly red throughout, a little bit of gray, a little bit of green sprinkled in. Each one of those greens on the 1 minute was during our bear flags, which makes a lot of sense. But outside of that, the market pulse was very confidently red. Once we broke over the market pulse, and we did so definitively, Then you can see how the market pulse continues to stay green into the close. So the trend switch here was also fairly easy to spot with regards to the market pulse. Now the 1 minute has a lot of variability. So if you come into something like, say, the 5 minute, that lets you see this a little bit cleaner. Now the 5 minute, you might argue, is a little bit lagging. So for days like today, you might even find something in between that suits your trading style. Maybe a 3 minute, which still offers pullback opportunities, but is a nice middle ground, and still helps you do things like spot trend switches a lot cleaner and quicker than, say, a 1 minute time frame chart. So that's using the market pulse for our market structure. We see red throughout on the 1 minute. The 1 minute is definitely a little bit more of that day trading scalping mindset. The 3 minute chart is a nice happy medium between the 1 and the 5 minute. And on the 3 minute, we even had multiple signals that gave us our entries once we had pullbacks to the market pulse line. Now, outside of the market pulse, there's a different angle that we can use to understand market structure, and that would be moving averages. So if I load in our default set of moving averages, the cyan line is the 8 EMA, the magenta is the 21 EMA, the yellow is the 34 EMA, the dashed yellow on the outside is the 50 SMA, and then the dashed white is the 200 SMA. If we take a look at what all of these moving averages told us today, very clearly stacked to the bearish side all the way in the morning up until we have a crossover inside of the moving average. Once that crossover takes place, that's the trend reversal as well. So same idea, different set of indicators, tells you the same piece of information, which is overall market structure and trend for the day. Now finally, we take a look at our entries. There's a few different ways you could take a look at this. The most obvious, without any indicators at all, would be just using bear flags. So that's where every time we have a new low here form, price action's chopping around, we're waiting for this bear flag to break, or looking at the top of the bear flag for short side opportunities, given that our overall trend is still to the bearish side. So this is bear flag 1, bear flag 2, same idea. Our short side was towards the top side. All of these also tend to have a confluence with pullbacks into moving averages, or even the market pulse line if we load that back in as well. Let me load back in the market pulse. And this is our trend following strategy. I've broken this down in a little bit more detail in previous videos, so I'll leave a link to that. But the overall idea is looking for a pullback to the market pulse when the trend tells us we're in one direction or the other, in this case bearish. And we even have that pullback confirmed with our edge signal confirmation. So that was the confirmation for this particular pullback. This pullback, we had 2 confirmations here as well. For the reversal, we have the market pulse turn green. And once you turn green, pullbacks to the market pulse one more time are nice opportunities for entries in this new bullish trend. So that's our entry piece inside of our S&P 500 on our trend day as well. We've now pieced together market internals, which early on in the morning told us that, hey, we were expecting bearish activity. We then pieced together market structure. We saw lower lows forming. Each time we had lower lows, pullbacks to the market pulse or moving averages gave us our opportunities to enter. And if you don't like to use indicators, you can even do things as easy again as just drawing your simple bear flags whenever we break outside of the trend or come into the higher place of resistance or support. That gives you your entry opportunities. I hope you found today's video useful for those of you looking for some clues of trend days, maybe other things to look out for, or maybe it sparks some ideas for other research you could do yourself. Take care, everyone. Good luck trading, and I'll see you in the next update.